I'm Charlotte McLeod with investingnews.com, and here today with me is Ted Butler. He is a precious metals analyst, and he writes for the Morgan Report, the In Gold We Trust Report, and more. Thank you so much for being here.
Thank you for having me, Charlotte. I'm looking forward to this.
I am as well. Great to have you here. And just because it is our first time talking, maybe give me a little bit about your background and how you came to the precious metals sector.
Sure. Well, originally I wanted to be a financial advisor, and I was studying in the University of Liverpool to become a financial advisor. My master's in finance was the final part of my studying, and I decided to drop out because I was educating myself on monetary history, the history of gold and silver. It wasn't part of the curriculum. It was solely about the 60-40 portfolio, bonds and stocks. And I was like, where's gold and silver? Because really it's sound money. And I embarked on a career connected with David Morgan, Ronnie Stoffler, and essentially carved my own path as a writer and a cover of Gold and Silver.
Very interesting. I like always hearing about people's past, and that's a good one, I think, to come to this industry. So we are going to get into a number of the different precious metals, but let's start with gold. Yeah. And normally what I like to ask people when I'm first meeting them is, where do you see gold in the cycle right now? Where are we at?
Yeah, I mean, obviously it's had an amazing run, and a lot of people may believe that it's overvalued. But there's a lot of metrics that we look at in the In Gold We Trust report that suggest that it isn't. For example, if you look at the monetary base since the 1980s, it's risen 3,500% up to today. The gold price has only risen about 800%. 800%. So there's still a lot of upside there in the gold price. And you've got to ask yourself a few questions like, are the catalysts still in place for gold? The central banks are still buying 1,000 tons of gold, and they have done for the last 3 years. So the central bank buying is continuing. If you look at the structural weakness in the US dollar, that's still continuing. We have Trump literally needs a weaker US dollar for the US exports to be cheap on the global stage. We also have inflation rearing its ugly head. Trump wants Jerome Powell to leave the Federal Reserve because he will not lower rates. We're also living in an environment of trust, lacking in trust. Ronnie calls it a bear market in trust. You know, we have these kind of divisions geopolitically between the BRICS and the US. Trump saying recently that he's going to slap a 10% charge on countries that engage in the BRICS or are part of the BRICS. And that's not conducive to a certain geopolitical environment. And all those things, I believe, play into gold's favor. And also, the debt problem hasn't disappeared. We're at $37 trillion of debt nearly now. And that was from, less than a trillion, in the 1980s. So this is an amazing time to get into gold, I think, contrary to what people believe is given the recent run-up.
I think that's a great overview of the factors driving gold. So thank you for going into that. And it is an interesting time for gold where we did run up and now a little bit lower, but still really close to those all-time highs. I think, interestingly, what I see among our audience is people who are maybe a little bit concerned that it has had that pullback. So maybe we talk about what you see coming for the gold price as we head toward the end of 2025, or you can talk beyond that if you'd like.
Sure. I mean, typically there are seasonal periods where gold has weakness. We call it the summer doldrums, where gold performs slightly lower than the benchmark. And I would imagine that after such an amazing run-up that we're going to see something similar to that, at least in the summer months. But I think as the uncertainty continues, as the BRICS grow in power, the long-term trajectory of gold remains unchanged. We're still on the path to, I think $4,800 gold. That's kind of the In Gold We Trust report benchmark that we think it'll be at by 2030. I think it'll probably go on to do better than that when you consider the debt problem and the fact that the current biggest government expenditure is interest on the debt, and that's not being lowered.
No.
So Uncle Sam's got a big problem.
Very true. Yeah, that is a good way to put it. So gold looking good, and those large numbers are numbers that don't sound very big anymore. They sound pretty attainable. That's what's happening with gold. I want to also move over to silver, which I think is really your area of expertise. So interesting times for silver as well as gold. I know a lot of people have been watching gold move, waiting for silver to start to move along with it as well, which it has in recent weeks. I know, again, we're in a little bit of a silver pullback right now, but can you share your thoughts on where we're at with silver right now? And if this move, I think a lot of people want to know, is this real? What's happening?
Yeah, well, funnily enough, a year ago, I wrote the chapter for the Ingleby Trust Report, and we called it Breakout or Fake Out. Is this the moment, or is it the moment that silver inevitably falls again and never makes it past these all-time highs? But I think this is the moment because we broke through technically what was a really important level, that 35, 36 level. We're now at 36.50. And I think the coast is really clear now in terms of silver has the license to go and outperform against gold. Fundamentally, the market is in a deficit. There's a lack of supply relative to the amount of demand. And there's many structural reasons for that. We talk about the peak mine production of silver is, arguably on its way. We look at the demand side, the size of solar demand, about 200 million ounces a year. And all that translates to what is 5 years of supply deficits now. And that, for context, is equivalent to 1 year's entire mine production. So we're now at a point where the market, just like uranium was a few years ago, is in a deficit. And it might take a while for that to incubate and for the price to reflect that. But silver historically outperforms gold. It has done 6 of the last 8 times since 1967. So this is something that, if history repeats, silver should go on to outperform. We can talk about more the catalyst that I'm sure later in the interview.
Yes. Clearly the history is behind silver, and definitely let's talk about the catalyst. Maybe I can learn a little bit more about how you look at silver, because it's got that dual nature where it's got its precious side, its industrial side. And what I've been hearing recently is, okay, feeling good about silver, but there's still overhanging the industrial side concerns about recession in the US or globally. So how do you look at that?
Yeah, silver, it does straddle between those two categories, and in many senses that hinders it, because it's like this identity crisis. The market doesn't know whether it's a monetary metal or an industrial metal. I think it is both, and I think it serves it to be both, because industrially, silver obviously is becoming more industrial. Like 84% of mine production solely goes to industrial demand for silver. So it's growing. We can't deny that. But this idea that the monetary side of silver is dead, I think is a fallacy. Take India, for example, right? Last year, India invested 40%, ETPs, silver exchange traded products, were 40% of total retail investment in India last year. So that was in relative to 5% for gold. So that's a huge amount of a population, the biggest country in the world by population, devoting all of their 40% of their wealth, their retailing wealth to silver. And that's huge. So this idea that it's not a monetary metal anymore is a fallacy. And that's not to say the industrial side doesn't exist. It does exist. And there's actually many facets of that industrial demand that are growing. So beyond solar, there's also the solid state batteries. Samsung just released a couple of years ago a solid state battery that's twice the energy density of the leading lithium ion batteries. That could be transformative for the silver price in the long term, But this is the thing, it's the best conductor in the world, better than gold. It's historically undervalued. It's historically underallocated as well. People don't consider that. Relative to what it was in 2011, it's still like 0.03% of global wealth in silver. If that begins to change, we're going to have, upwards of $50 would be, an understatement of how high the silver price could go.
Right. So maybe we talk a little bit more about those catalysts for an even further move in the silver price, because as you said, this is the moment. It looks like it's the moment. So how do we get that push?
I think the industrial side is probably what's going to cause it to lag, perhaps going to drag it down. But I think if you look at silver's performance during rate cutting cycles, silver's performed, I think, 332% is averaged in the last 3 rate cutting cycles from the Federal Reserve. And that's significant. So if we see rate cuts, that could be a huge catalyst. And especially if Trump gets his way in replacing Powell, we may well have that. I know he doesn't have the legal jurisdiction to make that happen, but he might usher him out. So that's one. Possibly industrial demand itself could be sufficient to cause the silver price to rise, depending on how fast solar grows. We already know that the different generations of solar panels have higher silver, they contain more silver, and TopCon is taking a higher market share of the of the solar market, and that has I think it has somewhere close to 1.5 times more silver than the previous generation of solar panels. So it could come from either side. It could come from the industrial side or the monetary side, but it's so historically undervalued relative to the gold-silver ratio from the previous years. Currently it's 90. Going back to 1971, it's averaged 60. So even if we revert to the mean, we're talking $50 silver.
I always like the mathematical historical angle. So really good to go into that. And I have to ask, so looking at silver, there's this big opportunity. For you, what is your favored way? Every person is different, but how do you look at getting exposure to the silver space?
Yeah, I mean, I think first of all, the classic saying is if you don't hold it, you don't own it. So it's so important to have physical, whether that's coins or bars. After that, you would then look to the mining companies. I would begin with producers because that's the safer bet. And then I would look to the junior mining companies who are exploring for the silver. So that's the best way to do it. Some people go with ETFs. I don't personally own any silver ETFs. I feel much more assured knowing that I have the metal in my hand. But like we saw in India, that could prove as a great way to have a liquid asset and enter and exit as and when you wish.
Okay, so any final thoughts you would note on silver before we take a look at platinum?
I think it's just to get across that the optimism is not dead. We so many times the silver prices tried to break out, and so many people got optimistic. So many people believed this was the moment. I'm going to put my neck on the line and say this is the moment. I'm not saying it's going to be at $50 by the end of this year, but it's structurally making its way towards those higher prices. And even at the current gold price, even if gold were to fall to 3,000, silver is still historically undervalued relative to gold, and the catalysts in place are there to drive it forward.
I think really good summary of your thinking on silver. And let's move over to platinum. So this is a really interesting one. I think you had told me before we turned the camera on, David Morgan had also mentioned that at the Morgan Report, you were earlier than most people on the platinum price increase call. So I think it may have taken many people by surprise to see it finally moving after years in deficit. So tell me, if you can, what you saw coming to make you think this is time for that as well.
Yeah, well, we were calling for platinum when it was around $950, and it's now about $1,350, so considerable rise in a short space of time. But again, it's similar to silver. It was a fundamental supply deficit, and that still exists today. 73% roughly of the platinum supply comes from South Africa. South Africa is suffering from power outages. It's dependent on this dilapidated infrastructure that needs really improving. And that's obviously translates to the difficulty to mine platinum in South Africa. You also look at where the rest of supply comes from. It comes from Russia. How are Western investors going to get their hands on that? I mean, obviously they can, but they may be going against the government's wishes in doing so. And then on the demand side, what we've seen recently, the real reason why this price has risen is China. China, I think there's currently a week going on currently now, the Shanghai Platinum Week, which just shows the appetite for platinum investment, but not only as an investment metal, but as a jewelry ingredient as well. So it's been a combination of those two things, supply deficit and surprise in demand from China. And if you consider as well that maybe if the green energy transition doesn't happen as swiftly as we believe it will do, we could see a reversion back to internal combustion engines, and platinum is a crucial component in those cars. So that could also add to the demand side, and I think it will.
I think that goes in the direction I was hoping to go, and I think people are looking at it and they're wondering, similar to silver, is this sustainable? Is this a price rise that's going to stick around? It sounds like it is quite possible.
Yeah, I think in the short term it's probably overvalued.
Right.
I think there's a lot of hot air in the price. I think it needs to consolidate. I think it will. But after that, I think there's still a supply-demand imbalance there that warrants further investment, I think, or at least speculation. So it's in that sense, I would put platinum right now probably on the same level as silver. Perhaps silver number one still, but platinum probably number two as the sort of performance gold category to take on the baton from gold, along with the mining stocks, by the way.
Got it. Number one and number two. And maybe if you could talk a little bit about how to get exposure to platinum. Is it similar to what you would do for silver or different because it is a smaller market?
Yeah, I think similar in the sense that physical first.
Yeah.
If you wish to dabble in ETFs, you're very welcome to. I would say it's better to have more caution when it comes to the mining companies, because like I said, there's a lot of supply risk and jurisdiction risk in South Africa. That's not to say that all the companies are bad, but it is harder to find a stable platinum mining company than it is to find a silver mining company. There's many great silver companies out there. I'm based in Latin America now, and in Argentina, even in Colombia, there's some actually really great silver companies there. And I think you don't have that kind of diversity of jurisdictions with platinum. It's more concentrated in South Africa.
Very true. All right. I think we've taken a good look at gold, silver, platinum. Before I let you go, any final thoughts you would leave investors with right now?
I think this is just silver's moment. I really do believe it. And I know I've been banging the drum for 2 or 3 years now, but I do believe that this is the moment where we are going to see the outperformance begin. And I think investors should position themselves wisely.
Great words to end on. So thank you very much for coming on to talk. This is great and hope to have you back soon.
Thank you very much, Charlotte. Appreciate it.
Okay. And once again, I'm Charlotte McLeod with investingnews.com, and this is Ted Butler.